Good morning, guys. So you are welcome to another session of management accounting. And today we are going to continue with our budgeting systems. We are going to continue with our budgeting systems. From our previous session, we looked at flexible budgets and we looked at the form flexible budgets and flex budgets could take. We also looked at the difference between a flexible budget and a flexed budget. Okay, so today we are going to start with our budgeting systems. The first one we are going to start with is what we call zero-based budgeting. Now, when we say zero-based budgeting, what does it mean? It means that you are preparing a budget for each of your cost centers, right? Or activities from a zero base. And then when we talk about a cost center, it is a segment of the business where we can pull cost. Budgeting is a technique for accumulating cost, right? And estimating cost, excuse me. Now, every item of expenditure has then to be justified in its entirety in order to be included in the next year's budget. Now, what does this mean? So let's say last year, you prepared a budget, right? Maybe you included hair extensions, maybe 4,000, right? Maybe you included maybe food, 50,000, let's say 5,000. You included school, for maybe 25,000. That is fine. Yeah. Now, once you've done this, this is what you did the last time. Now, if you are preparing your budget, your zero-based budget, all these expenses, you wouldn't consider them yet. You will start from scratch, right? You start from scratch, empty. And then now you'll be considering this one by one, whether you still need this, whether you still need this time, or whether you still need it this time. Okay, maybe this year I need hair extension, but how much would it cost, right? So you are starting from zero, from scratch, hence the name zero-based budgeting. I hope you get the idea. So every item of expenditure has then to be justified in its entirety in order to be included in the next year's budget. So how do we implement this? Now, zero-based budgeting, which is ZBB, is particularly useful for budgeting for discretionary costs, right? Costs that are discretionary, like there are some things that they can be or they cannot be this time, like the hair extension. We may not need hair extension because we still carry the hair we already have, right? And that is what? A discretionary cost for rationalization purposes, to think about it, whether you need it this time. In areas of operations where efficiency standards are not properly established, such as admin work, right? So regarding administrative costs, maybe this time we may not need stationery. Maybe this time we may not need staplers because some of them, in effect, though they are small, they may be fixed costs that we may not need, right? Because already that stapler can last a long time. Okay, this is one typical example. So zero-based budgeting has three main steps which you need to what? You need to follow. Okay, so there are three main steps which you need to follow, okay, for zero-based budgeting. Okay, for zero-based budgeting. And then what are the three steps you need to follow? What are the three steps you need to follow? As I said, there are three main steps for zero-based budgeting. And what are these three steps? The first step is to define the items or activities for which the cost should be budgeted, and spending decisions should also be planned, right? These are what we call decision packages, right? Like the hair extensions, the food, the things that we talked about. What are you going to take decisions about? Now, these decision packages could be things that you cannot what? Have at the same time, right? By comparing cost and benefits and considering other packages. Okay, so sometimes we can have what we call mutually exclusive packages, and we can have what we call incremental packages. Now, the mutually exclusive packages are alternative methods of getting the same job done, right? But we are saying that, okay, they cannot be done at the same time. That's what mutual exclusivity means, okay? So the best option among the packages must be selected by comparing the costs and benefits, and other packages are then discarded because they are mutually exclusive. You can't do them at the same time. So you consider the ones that it is more appropriate to include. So even within the hair extensions and the food, maybe we look at it and we say, okay, we either have the choice to go for hair extensions or we have the choice to go for food. Or even with the hair extensions, there are different kinds that we can get, right? So you look at the cost and benefits of these, then you decide which one you like. That means you must discard the other one. Okay, so that is the first one. The second type of decision packages are what we call incremental packages. Now, these divide an aspect of operations into different levels of activity. So the base package or the starting package will contain the minimum amount of work that must be done to carry out the activity and the cost of this minimum level. Okay, so we looked at, okay, at the base case, the minimum level, this is what we have. Maybe the starting point is 200 cedis, right? Then we will now what? Identify additional or incremental work that we could do and at what cost and for what benefits that can add up to it. So still at a zero base, we can say that, okay, we know that, okay, as at last time, the hair extensions were 50 or they were 100 or they were 500. Okay, but this is the minimum cost that we could consider. But apart from that, there could be increases and decreases based on whether there will be some transport costs, there will be some other costs, maybe increase in prices in the market. You have to consider all that, right? So the decision package may be a package which is mutually exclusive or an incremental package. Okay, so that is the first part of it. Now, the second step is that after you have defined your packages, okay, the next thing is you have to evaluate and rank the packages in order of priority. So there are some things that if you start from a zero base, you have to evaluate and see whether their cost exceed their value or their value exceeds their cost, right? To justify whether they should be included in the budget or not. That is the first one, right? And the second is that, okay, these ones that I have included, which ones should I also be eliminating? Okay, so which ones should be eliminated and which ones should be kept in the budget? Then from there, you now allocate resources to those decision packages according to their ranking. So in the order of your hair extensions, food, school, which one are you now going to what? Allocate. You've already ranked them, right? In order of priority. Okay, that's fine. Now, where resources such as money are in short supply, you allocate it to the most valuable activities. So just like you did for limiting factor decisions, you now allocate, right? Okay, this one, let's say we have 50,000 available, but everything there is worth 80,000. We look at the ones which are high in ranking, the highest in ranking, right? So that we can deal with these ones, and the less important ones, we will deal with them later when we have the funds, or not deal with them or eradicate them completely. So as I told you, there are 3 steps. You define the activities for which you want to budget, I get it, and then you make spending decisions. And these activities may be mutually exclusive or what? Incremental activities, which we call decision packages. Then you evaluate and rank these packages in order of priority. And then remember to eliminate the packages whose costs exceed their value. Then the third is what? You try to allocate resources to the decision packages according to their rankings. Okay, so where resources such as money are in short supply, you allocate it to the most valuable activities. So that is zero-based budgeting. Now, as I told you, in management accounting, you always try to know the advantages and disadvantages of any model that you have to apply, right? So what are the advantages of zero-based budgeting? Now, zero-based budgeting helps to identify and remove inefficient or obsolete operations or decision packages that you may not need this year. That is why you start from a zero base. It can help you avoid wasteful expenditure. If last year we needed hair extensions, this year we may not include hair extensions. 3, it increases motivation of staff by promoting a culture of efficiency. Yes, you'll be efficient because you have eradicated things which are wasteful, things that will not bring any result. And it responds to changes in the business environment. Yes, if some things are changing, then we may not include the previous ones, right? And also, zero-based budgeting documentation provides an in-depth appraisal of an organization's operations, okay? It challenges the original status or the status quo, how you do things, because it is changing the way things are done. So in summary, it should result in a more efficient allocation of resources. Okay, so those are the advantages of zero-based budgeting. What about the disadvantages? The first disadvantage is that you need extra volume of paperwork and you need extra time to prepare that budget because it involves a lot considering and justifying expenses. Remember the 3 steps. 2, short-term benefits might be emphasized to the detriment of long-term benefits. We've seen this, and it might give the impression that all decisions have to be made in the budget and discourage what? Innovative ideas. So sometimes this discourages innovative ideas because you are justifying expenses which were previously created or which you can include, right? So before you can do zero-based budgeting, it needs training. And before you can train people, comes at a cost. Remember, the organization's information systems may not be capable of also providing suitable information for zero-based budgeting. And the ranking process can also be difficult because after justifying, you wouldn't know which one is high priority, which one is low priority, right? So it can lead to problems. So this is zero-based budgeting. Okay, so the next system of budgeting, which we have to look at, is what we call activity-based budgeting. And activity-based budgeting, you have to cast your mind back to activity-based costing. Now, this activity-based budgeting is a budgeting system which involves defining the activities that underlie the financial figures in each function and using the level of activity to decide how much resource should be allocated and how well it is being managed, and to explain variances from the budget. So how does the principles work? You look at activities that drive costs. Already, you know from activity-based costing that your overhead absorption rate or your cost driver rate, right? Your cost driver rate is determined by what? Taking your total cost in the cost pool, right? So this is a budget item. Your total cost in the cost pool divided by the number of cost drivers, right? So there are some activities that drive cost. And the aim is to plan and control these drivers. So the whole thing is that this budgeting system tries to control these cost drivers, right? Rather than the cost themselves, because it may be difficult to control the cost. But however, remember that the drivers of the cost increase the cost. So if maybe number of deliveries, you are doing delivery costs, right? Delivery cost is the cost you want to control or the cost you want to budget. We know that the total number of deliveries are going to what? The total number of deliveries are going to what? Affect the delivery cost. So more deliveries done, more delivery cost, right? So how do we then what? Control these activities. But as part of looking at these things, you also need to know what activities may not be value added, right? So the whole thing is that those activities which are not value added must be eradicated. We must delete them, okay? Now, most departmental activities are driven by demands and decisions beyond the immediate control of a manager responsible for the department's budget. Yes, for instance, number of deliveries you cannot control it, right? It depends on what you want to do. Okay, so there are some costs, okay, and the drivers which cannot necessarily be controlled by the manager who is responsible at a particular time, right? So that is why you must look at those which are value adding and you must keep them, and those which are non-value adding must be eradicated. Now, additional measures apart from traditional financial measures are also needed to ensure continuous improvement. So continuous improvement is a very important feature. Anytime you are looking at what budgeting, you are looking at cost estimation, you always have to have a culture of continuous improvement within the organization. Now, what are the advantages and disadvantages of this system of budgeting? Now, the first advantage is that critical success factors will be identified and performance measures devised to monitor progress towards them, right? Towards what the activities that you are trying to improve upon, right? A critical success factor is an activity which you must perform well to succeed. So what activities must you perform well to succeed, and which ones must be eradicated? Now, because concentration is focused on the whole of an activity, not just a separate part, there's more likelihood of getting it right the first time, right? Or even if you're not getting it right the first time, you should try to get it more right the next time. So still having a culture of total quality management, right? But the disadvantage is that sometimes the manager does not have complete control over these activities. And 2, sometimes it's difficult to know what particular thing drives a particular cost at a particular point in time. And sometimes too, you can see one cost item which has a lot of cost drivers, which is a problem, right? And mostly this is used in modern manufacturing environments, making a traditional system difficult to apply. So these are the disadvantages, right? Now, the next thing or the next system we have to talk about in budgets is a rolling budget. Now, a rolling budget is a budget which is continuously updated by adding a further accounting period, a month or quarter, to the end of the budget where the corresponding period in the current budget has ended. So it's like the budget continues. So let's say we have quarter one, let's say 2023, quarter one, quarter two, quarter three, and also quarter four, okay? This is what we have. Then we have figures here, okay? Now, this one was the first year. Now, we continue. Are you getting it? We continue like that. So maybe in 2024, maybe we could start from 2023, quarter three, quarter four, then we start with 2024, quarter one, 2024, quarter two. So you see, it is rolling, okay? So we prepare a number of rolling budgets. It depends on whether it's the monthly one or quarterly one. It depends, right? So we continuously update by adding a further accounting period. So if you are reporting quarterly, then after we do this quarter, we will take previous quarters and update with the next quarter. Then it keeps rolling. Okay, that is how it goes, just like what I've done. If it was monthly, maybe I've done January to December, right? Maybe I may start from what? July this year. Assuming it's a 12-month period, I'll start from July this year and end at December the next year. Okay, so you do it that way. It depends. It depends. So a part of 2023 will be here. A part of 2024 will also be here. Okay, or we can start from, as we are in 2024 now, we can start a part of 2024 and then it will end in 2025. Okay, so that is how we do rolling budget. But then let me ask you this, or let me tell you this actually. Now, if this thing should come in exam, it's not difficult. All you are doing is justifying or coming up with the expenses and ensuring that they should be included in this period, or they should be included in that period. And what will they do? They are just going to bring adjustments, okay, normal adjustments. For instance, they will tell you that sales is expected to increase. Sales is expected to increase by what? 25% in the next quarter. Okay, so if sales is expected to increase by 25%, you expect that cost of sales will also see an increase by what? 25%. There will be specific expenses. Maybe depreciation is considered to be what? 10% of sales. So you take 10% of that sales for that quarter, and this will continue to increase in the same fashion for the next 3 quarters. So you just have to implement exactly what the question is telling you. Maybe fixed costs are likely to fall by what? 30%. So you take 30% of the fixed cost for the next, maybe the next month or the next quarter, and then you just implement this. This is what we are talking about, right? So we are saying that when these ones come, you just look at the particular quarter that they are expected, or the particular month, and then you just implement it. It's not anything difficult. You just have to take your time, okay, and deal with this. It hardly pops up, but that one in incremental budgets is mostly the same, just that incremental budget, you add on little by little, right? So that one, they can give you things and then you implement it based on the additional thing that you are considering to add up. Okay, so it depends on the exam question that they are giving you. Now, what are the advantages? One, element of uncertainty in budgeting is reduced, yes, because you base it on what was there and then you increase it, right? You roll it on. Now, budgets are reassessed regularly and up-to-date budgets are produced. Okay, this is one of the advantages. Planning and control will be based on realistic and recent plans. Realistic budgets are better motivational factors for employees, so it can motivate employees. And there's always a budget which extends for several months ahead, okay? So these are some of the things that you need to consider. Now, what are the disadvantages of these rolling budgets? Now, you need more time, you need effort and money, okay, in the budget preparation. You need to train people in it, and there's frequent budgeting might also put managers off because you are always starting from somewhere. What was already done, you update it again and again and again. It could be sort of a headache for managers, right? So those were rolling budgets. So we've looked at the budgeting systems. However, we are coming to look at the behavioral aspect of budgeting, which still has some budgeting system, right? So there are two main budgeting systems that are here, but then we are looking at how people behave when it comes to budgets. Okay, so it may be a participatory approach to budgeting, a participatory approach, or it may be an imposed approach, right? Now, these are like two ways we consider behavior towards budget. For instance, if you take your first salary and then your father comes and he said, oh, this is your first salary. I want you to sit down with me and decide what you are going to use your salary for. And let me see if they are good, right? Participatory style. Both of us sit down. I take your opinions into consideration if they are justifiable. Then I let you implement. Then I'll put controls and targets in there for you to achieve. Then impose style, you take your salary and your father says, you know something, this salary, use it to buy this, use it to buy that, use it to buy this. I don't think you would agree. Why? Because it's your own money. And two, you'll be demotivated because your father is telling you what you use your money for. This style will be most appropriate if you are the careless type. If you cannot, if you are wasteful, right? Then we can assume the impose style for you because you are wasteful. So it is better your father decides what you use your salary for. Now the problem is that with each style of budgeting, they have pros and we have cons, right? So you must know whether with the participative style, top management will be involved together with what? The way they participate in your process. So you come up with your budget in your own way, send it to them, let them review, then you sit down, give feedback, and so on and so forth. That is not bad. But the imposed style management, I get it, will impose the budget on you. It is non-participative. Okay. So it is very easy for the budgetary process to cause dysfunctional activity. For example, if junior management believe that the budget imposed on them is not attainable, their aim may well be to ensure that the budget is not achieved, thereby proving themselves to be correct, right? So it can lead to dysfunctional behavior. Now, this needs to be avoided, and therefore an understanding of the behavioral aspects is necessary. Managers may be involved in setting budget targets, or these may be imposed by senior management without consultation. Okay, so there are two main systems which I explained earlier. Now let's look at the top-down approach or the imposed style of budgeting. Now, this is a budget. The imposed style is a budget which is set without allowing the ultimate budget holders to have the opportunity to participate in the budgetary process. And this also has its own advantages as it can lead to speed. It can let central management come up with their own expertise because they know what is going on, right? But at the same time, it has disadvantages because it can demotivate staff. It makes managers are stuck in the I can do it myself fallacy. Because if I'm imposing for you, then there might be some things you may not need, but I may think you may need it, right? So adequate information may not be there. So it is called imposed budget or non-participative budget. And what are the features? Now, one, senior management prepares the budget. Two, it is imposed on junior management. Three, it is quicker than the bottom-up approach because this one we've done it and we are giving it to you, and it could be time-saving, right? Okay. Now, the time when imposed budgets are effective, when it's a new organization, that one, mostly new organizations have taken the entrepreneurial structure. So it's the boss who mostly makes all the decisions. So most of the time, it's the boss who is going to what? Take these decisions. For small businesses, mostly in period of economic hardship, these ones are better. When operational personnel have lack of budgeting skills, you have to do it yourself. And when different organizations units require precise coordination, then that is when it is effective to use this imposed style of budgeting, right? So what are the advantages of the imposed style? Now, strategic plans will be incorporated in the budget because it is considered by top management or it is designed by top management. Two, it leads to increased coordination between plans and long-term objectives of the company or the particular division in question. And it involves senior management in operational decisions. It can also lead to decreased input from inexperienced employees, right? So the thing is that if employees are not experienced in the budgeting process, why are you including them? And it could be time saving because if you are bringing your own budget, it will take time because of reviews, control, and other stuff. What are the disadvantages? One, it could lead to low employees' morale. So this is hard for people to be motivated to achieve targets that are set by someone else. Of course, because it's not set by me, sometimes there could be what? A disadvantage. There could be a problem, right? Because there may be low employee what? Morale. Two, acceptance of organizational goals and objectives should be limited. Okay. So the whole thing is that could be limited. The whole thing is that some people may not accept what you are giving them, right? What you are giving them. So it might be possible these people or these persons might not accept what is given to them. Three, operational managers are likely to have a better understanding of day-by-day operations, okay? Because they do the day-to-days. So if you are imposing it on them, then you lack the local knowledge because you do not have the knowledge there. You are setting something for them. Maybe if I'm at this branch and you are setting this unrealistic budget for me, you are setting this unrealistic budget for me, I may be like, okay, the people here do not need water, but you are suggesting we should give them water. It becomes ineffective, right? So also, the budget may not be achievable because you are not at our level to know whether this budget is achievable or not. And the feeling of team spirit may disappear because we cannot do it together because it is not coming from us. No, so it's not coming from us. And lower level management initiative may also be stifled, yes, because some people want to grow their career and other things. If you are not giving them that opportunity, they will stay where they want to stay. So that was about the impose style or the top-down approach. Let's look at the bottom-up approach, right? Which is the participative style of budgeting. Now, the bottom-up budgeting system of budgeting, okay, is a system of budgeting in which the budget holders have the opportunity to participate in setting their own budget. So as I told you, you take your salary, you sit down with your father, you come up with the expenses you want to spend, you send it to him, then he looks at those that are justifiable and those that must be discarded, right? That is the participative style of budgeting. What are the features? One, junior management prepares the budget. Senior management will review to ensure whether it is consistent with the organization's objectives. But there's also risk of bias or unused items, right? We call them slacks or budgetary slacks, okay? So that is about the participative style. You prepare, we sit down, we review, we consult also, but there's a risk of what? Budget bias, where you may have bias towards some issues in your budget or some particular expenditure. So what are the advantages? One, it will lead to increased morale and motivation on the part of staff because they feel they belong or they feel part of the decision-making process too. It should contain better information, especially in a fast-moving or diverse business. Three, it increases managers' understanding and commitment. Four, it leads to better communication because it is from lower level management. Senior managers can also concentrate on other important issues like setting of strategy. In general, they are more realistic because it comes from the local level. So individual managers' aspiration levels are more likely to also be taken into account, okay? So these are the advantages of the bottom-up style or the participative style of budgeting. What are the disadvantages? The disadvantages are that senior managers may what? Lose control, okay? May experience recent loss of control because they feel like they are no longer in charge. Two, bad decisions may be taken from inexperienced managers. There are some managers who are not experienced at all, and then they may take bad decisions, right? Three, budgets may not be in line with corporate objectives because if I've done it, I'll do it just to satisfy myself, or it may not be in line with what the organization actually wants to achieve, but maybe what I need if I was the manager. And the budget preparation process is slower, okay? It can also lead to disputes. So they may cause managers to introduce budgetary slacks and budget bias. As I told you, that is the risk with this type of budgeting style. And an earlier start to the budgeting process could be required, right? Sometimes you may require an earlier start to the budgeting process, which may still take time. And they can support empire building by subordinates, right? Some people may want to build their own wealth because they feel like, yes, this one, I am the one in charge. Figures may be subject to bias if junior managers either try to impress or set easily achievable targets. These are some of the things that you face. Now, certain environments may preclude what? Participation. For example, a sales manager may be faced with long-term contracts that are already agreed, right? So these are some of the disadvantages of the bottom-up approach or the participative style. It comes from the bottom, goes up, then we review, right? So have this with you. Now, while the bottom-up approach is generally seen as preferable, there are situations where top-down is applicable. And we looked at where top-down is effective, like a new company, a small company where there's economic downturn. Also, when we have inexperienced managers down there, all these are things we consider. And we know when to use the bottom-up as well. So there's something we call a negotiated style of budgeting, right? And this is a budgeting with budget allowances, okay, are set largely on the basis of negotiations between those who hold the budget and those to whom they report, right? So this one we negotiate. It is a type of what? Budgeting system, which is like, it is in between the imposed style and then the participative style. So we decide, we agree on it, right? So at the two extremes, budget can be dictated from above or simply emerge from below. But in practice, different levels of managers will agree budget by process of negotiation, right? So this one is in between the participative style and the top-down approach or the imposed style. In the imposed budgeting approach, right, operational managers will try to negotiate with senior managers like the budget areas, and also the budget areas which they consider to be unreasonable and realistic. So likewise, senior management usually review and revise budgets presented to them under a participative approach through a process of negotiation with lower level managers. So the final budgets are therefore most likely to lie between what top management would really like and what junior managers believe is feasible. The budgeting process is hence a bargaining process, and it is this what? Bargaining which is of vital importance, determining whether the budget is an effective management tool or simply a clerical device. So that is the negotiated style of budgeting. So even within the imposed style and the participative style, we still negotiate, okay? So what are budgetary slacks? Now, this is what we call budget padding. Budgetary slack is the difference between the minimum necessary cost and the cost built into the budget or actually incurred, right? So in the process of budgeting, managers might deliberately overestimate costs. That's why I told you that mostly we call slacks unused variable. Okay, so in the process of budgeting, managers might deliberately overestimate costs and understate sales so that they will not be blamed in the future for overspending and poor results. So manager of a profit center, which is a segment of the business which accumulates both costs and revenues, right, might understate budgeted sales or overstate budgeted expenses, leading to a budgetary slack. Why is that so? Because one, reward systems may be linked to performance compared with the budget. Some people are expecting to get some bonuses. That is why they may do this. Okay, so achieve revenue of 300,000 and I have 299,900. I can just add 100 to it, right? To just get that budget that we want to get that what bonus. Okay, so this encourages the manager to build slack into the budget to maximize personal gain. Two, the reason is to reduce work-related stress by having easier what targets. And three, gaming. So gaming involves somewhat where some individuals enjoy trying to beat the system. Okay, some people try to beat the system. Okay, they try to collide or override what has already been set. Okay, so this is one thing you must understand. So of all these things we are looking at, assuming you bring an imposed style or you bring a participatory style, how do people behave? What is the behavior of people towards these systems, right? And that is the implication, that is the behavioral implications of budgeting. Now, used correctly, a budgetary control system can motivate, but it can also produce undesirable negative reactions. Now, the purpose of a budgetary control system is to assist management in planning and controlling the resources of the organization by providing appropriate control information. The information will only be valuable, however, if it is interpreted correctly and used purposefully by managers and employees. You get the idea? So we do not want to bring these negative reactions, but it happens. So their attitude to control information will color their views on what they should do with it, and a number of behavioral problems can arise. So the managers who set the budget or standards are often not the managers who are made responsible for achieving them. So I can set an unrealistic target, right? And then since you have to achieve it, you'll be like, oh, after all, it's not my father's work, right? This is one of the attitudes, apathy towards the budgeting process or towards the budget, right? Two, the goals of the organization as a whole, as expressed in the budget, may not coincide with the personal aspirations of these individual managers, right? Because what you want to achieve is different from what I want to achieve. And these are some of the behavioral implications. Now, control is applied at different stages by different people. A supervisor might get weekly control reports and act on them, okay? His superior might get monthly control reports and decide to take different control action. So different managers can get in each other's way and resent the interference from others. Okay, and most of the managers are also stuck in what? The I can do it myself fallacy. They feel like they can do it, they can do it themselves. So there's no need to what? Allocate it to somebody. And in actual sense, at that point in time, that person may be the right person that things should go to. The next point is motivation. Now, motivation is what makes people behave in the way that they do. It comes from individual attitudes or group attitudes. Okay, so individuals will be motivated by personal desires and interests. So it is therefore vital that the goals of management and the employees harmonize with the goals of the organization as a whole. And this is known as what? Goal congruence. So goal congruence is when we all try to achieve the overall corporate objective. We all go together to achieve the, okay, so there must be coordination or there must be harmonization to achieve what? The overall corporate objective. That's what we call goal congruence. Okay, so what are the overall corporate goals? How do we work hand in hand to achieve it? Is everybody following that plan? That is goal congruence. Now, the management accountant should therefore try to ensure that employees have positive attitudes towards setting budgets and implementing budget. That is putting the organization's plans into practice, putting people to work and getting a feedback of those results. That is the control information. So if this desirable state of affairs does not exist, the organization is at risk of underperforming as a result of dysfunctional decision making. Okay, so we are saying that if these things, goal congruence does not exist, I get it, can lead to underperformance, okay, which is as a result of dysfunctional decision making. So goal congruence is the state which leads to individuals or groups taking actions that are in their self-interest and also in the best interest of the organization. So what is the next thing is dysfunctional what? Decision making. Now, dysfunctional decision-making occurs when goal congruence does not exist or is impaired. So managers and others take decisions that promote their self-interest at the expense of the interest of the organization. That is what we call dysfunctional decision-making. Now, what are some of the poor attitudes when setting budgets? So if managers are involved in preparing a budget, poor attitudes or hostile behavior towards the budgetary control system can begin right from the planning stage. So managers may complain that they are too busy to spend time on budgeting. They may build slack into their expenditure estimates, and we've talked about budgetary slacks. They may argue that formalizing a budget plan on paper is too restricting and that managers should be allowed flexibility in the decisions that they take. They may set budgets for their budget center and not coordinate their own plans with those of other budget centers, right? So it may lead to lack of goal congruence or dysfunctional decision-making or dysfunctional behavior. They may base future plans on past results instead of using the opportunity for formalized planning to look at alternative options and also new ideas, right? So when people are also putting, so this is from the planning stage, right? When people are now putting those plans into action, there may be some poor attitudes or behavior as well. Okay, so poor attitudes may also arise when a budget is implemented. One, managers might put in only just enough effort to achieve budget targets without trying to beat the targets, because it's not his father's house. It's not his father's work or his mother's work. Okay, so it becomes apathetic. Two, a formal budget might encourage rigidity and discourage flexibility. So most fixed budgets are not flexible. They are rigid, and that is what has been built into the system, okay? And short-term planning in the budget can draw attention away from the longer-term consequences. So some people can look at, oh, this thing in the short term, it could lead to profitability, but in the long term, I may not be with the company. So why focus on the long term? This is what we call short-termism. Okay, it is a problem that we can have when it comes to what? Putting plans into action. The next thing is what? There might be minimal cooperation and communication between managers. Okay, so people may not cooperate, as you know. Some people's work will cross other people. Managers will often try to make sure that they spend up to their full budget allowance and do not overspend, so that they will not be accused of having asked for too much spending allowance in the first place. But this might not be good for the organization. So when you are using control information or when you are measuring variances, okay, there can be some poor attitudes as well. So the attitude of managers towards accounting control information they receive might also reduce the information's effectiveness. So management accounting control reports could be well seen as having a relatively low priority in the list of management tasks. So managers might take the view that they have more pressing jobs on hand than looking at routine control reports. Two, managers might resent control information. They may see it as part of what? A system of trying to find fault with their work. This resentment is likely to be particularly strong when budgets or standards are imposed on managers without allowing them to participate in the budgeting setting process. So if you didn't include me, why are you now coming to give me work to do? You didn't include me when you were setting the budget, and this is a bad behavior. Now, if budgets are seen as pressure devices to push managers into doing better, control reports will be what? Resented because you are coming to measure my performance. People do not like that. Managers may not understand the information in the control reports because they are unfamiliar with the accounting terminology or the principles. This is another area, so it requires some sort of training. And then finally, managers might have a false sense of what the objective should be. So if you do not have clearly defined purpose of objectives, it could be a problem. Now, a production manager might consider it more important to maintain quality standards regardless of cost. He will then dismiss adverse expenditure variances as inevitable and unavoidable, right? Because it feels like these things would be there. So that was it for these sort of activities, right? That what false sense will be created, right? Sometimes there's a false sense of what their objectives would be, and then they will then dismiss adverse expenditure variances because they think they may be unavoidable, but it's not always true. Okay, so if there are flaws in the system of recording actual cost, managers will dismiss control information as what? Unreliable because they think there are flaws in the system. Now, control information might be received weeks after the end of the period to which it relates, in which case managers might regard it as out of date and no longer useful. Now, managers might be held responsible for variances outside their control. Okay, so it is therefore obvious that accountants and senior management should try to implement systems that are acceptable to budget holders and which produce positive effects. So the last thing we have to talk about is pay as a motivator. Now, many researchers agree that pay can be an important motivator. When there is a formal link between higher pay and other rewards such as promotion and achieving budget targets, individuals are likely to work harder to achieve budgets if they know that they will be rewarded for their successful efforts. There are, however, problems with using pay as an incentive. A serious problem that can arise is that formal reward and performance evaluation systems can encourage dysfunctional behavior. Many investigations have noted the tendency of managers to pad their budgets either in anticipation of cuts by superiors or to make subsequent variances more favorable. And there are numerous examples of managers making decisions in response to performance indices, even though the decisions are contrary to the wider purposes of the organization. The targets must be challenging but fair, otherwise individuals will become dissatisfied. Pay can be a demotivator as well as a motivator as well. Okay, so these are some issues around pay, right? Some people just focus on pay. So these are the budgeting systems, but we'll talk about one other area, which is what we call beyond budgeting. Now, beyond budgeting is one approach to budgeting that tries to resolve the weaknesses and limitations of the traditional approaches to budgeting. So what are the criticisms of our traditional budgeting systems? Okay, traditional budgets based on fixed annual periods, one, they encourage what? Rigid planning and a lack of what? Flexibility, which may not be appropriate in a fast-moving business environment or modern environment. They are time consuming, okay? They encourage managers and employees to meet only the lowest target rather than attempting the best target set, right? So it is inconsistent with what? The total quality management approach. This also encourages managers and employees to achieve the budget, even if this results in an undesirable one. Actually, they are just focused on achievement. This fixed budgets encourage managers and employees to spend what is in the budget, even if it is not necessary, just to guard against next year's budget, you see. They reinforce the barriers between departments rather than encourage knowledge sharing. And then they are seen as a mechanism for top-down control by senior management, but organizations should be empowering individuals on the front line. They ignore key drivers of shareholder value by focusing on short-term financial performance, and they produce inadequate variance reports, leaving the how and what unanswered, right? How should it be done? What should be done unanswered, right? So these are the problems with traditional budgeting. They can ask you in a question for 6 to 8 marks. So what then is beyond budgeting? Beyond budgeting is a leadership philosophy that relates to the alternative or to an alternative approach to budgeting, which should be used instead of the traditional what? Annual traditional budgeting, right? So we are saying that, okay, this is a leadership philosophy, but it focuses on what? What alternative approach to budgeting should we use instead of the traditional annual budgeting? What should be used in place of the traditional annual budgeting? Now, what are the characteristics of beyond budgeting? One, rolling budgets produced on a quarterly or monthly basis are suggested as the main alternative to annual budgeting, right? They are flexible, do not rely on obsolete figures, and should result in a more timely allocation of resources. The rolling forecast will embrace key performance indicators based on the balance scorecard, which is linked to the organization's strategy. So managers' performance measures will be based on this. And the budget may also incorporate benchmarking, linking managers' targets to external benchmarks and not past performance. So you see here, we are looking at alternatives to what? Annual fixed systems, okay? So it focuses the efforts on managing your future results. That is why it goes beyond budgeting, looking at how you can achieve organizations' objectives. What are your critical success factors? What key performance indicators can be put there to achieve them, right? Instead of just focusing on the budgeting. There are things which are beyond the budgeting. So you can allow operational managers to react to the environment. You can also encourage a culture of innovation, because where there's innovation, there's success, right? So if you look at the differences between the traditional and the new beyond budgeting model by Jeremy Hope, you see that when it comes to target and reward, the traditional model has incremental targets and fixed incentives. But beyond management, we look at stretch goals, relative targets and rewards. When it comes to planning and controls, when it comes to traditional budgets, we have fixed annual plans and variance controls. While here, we have continuous planning under beyond budgeting, KPIs and rolling forecast. When it comes to resources and coordination, with fixed budgets, we have pre-allocated resources and central coordination. But when it comes to beyond budgeting, we have resources on demand and dynamic coordination. And when it comes to organizational culture, around culture in traditional budgeting systems, we have central control. We focus on also managing numbers. But when it comes to beyond budgeting, there's a local control of goals and plans, and the focus is on creating value. So the whole thing is about the creation of value. What is the suitability? Now, industries where there's a rapid change in the business environment, they use this model, and flexible targets will also be responsive to change. Organizations using management methods such as TQM, continuous improvement, will be key. And organizations undergoing radical change, like using business process reengineering, okay? They need this. That is when this model is suitable. Now, budgets may be hard to achieve in such circumstances. So, what are the benefits of the beyond budgeting model? One, it shifts the focus from beating other managers to beating the competition by creating a climate based on the competitive success. It motivates individuals by giving clear responsibilities and challenges. It eliminates some behavioral issues by making rewards team-based, right? We go beyond budgeting. Authority is devolved to operational managers who are closer to the action and so can react quickly. Operational managers are empowered to deliver key ratios rather than keep to strict budget limits. It establishes customer-oriented teams, and it creates information systems which provide fast and open information throughout the organization. So let's look at how to apply the beyond budgeting approach to the private sector and to the public sector. Now, in the private sector, this entails devolved managerial responsibility where power and responsibility go hand in hand. So the focus moves from beating other managers to beating the competition, okay? It motivates people, giving them challenges, responsibilities, and clear guidelines. And rewards are team-based. Now, performance responsibilities are also given to operational management who are closer to the actions being taken, and it empowers managers to remove resource constraints. So creation of open information systems throughout the organization, right? This is from the private sector, sorry. Now, in the public sector, the greater flexibility that lies at the heart of beyond budgeting may prevent successful application of the model in the public sector. So beyond budgeting would require a mindset which not only moves away from control, but also requires a reduction in internal politics, which has been at the heart of the public sector for many years. And the managers within the public sector may have the desire for flexibility, but are likely to remain constrained by the inability of the organization to change. Okay, so this is the implications of beyond budgeting. Beyond budgeting. So that brings us to the end of this session. In the next session, we will dive into the aspects of budgetary control, and we'll start taking questions on functional budgets and master budgets, including the cash budgets. So stay tuned for our next session.